Now, what's going on right now is that we're getting a lot of noise. I suggest everybody, you sort of don't pay attention to the day to day here. I would basically circle the recent low the dollar made, dollar index, and a recent high that gold made. And if you ever go through them, you break it out. And just like the UK reversed monetary policy overnight, don't be shocked that the Fed has to do something similar, and the EU has to do something similar in order to defend what? Government bonds. So we're in a very delicate situation for them. I chuckle because I think it's justice due. I think it's likely to come undone. And either way, if they alter policy, what's that going to do to gold? If most of the selling pressure we've had in the last year and a half in gold, especially since the March high, is based on the assumption that the Fed is in control and they're going to bring, quote, inflation down, then if anything comes in to interfere with that assumption, like, oh gosh, they have a fire they have to put out, therefore they can't continue, then all of a sudden that assumption goes out the window very quickly. Okay, now to silver. Why do we emphasize silver? In major bull markets in gold and silver, silver tends to outperform gold. In fact, it's true with even modest bull legs in gold and silver. And if we go back 50 years and have analyzed the relationship between the two. Well, if you run a spread chart, and this is popular with a lot of people where they look at the number of ounces of silver to gold, we measure it on a percent basis, same type of thing, where silver has been declining in relative performance to gold since early 2021. Now, this is when silver, for a second time, it got up to almost 30 in the summer of 2020, pulled back some, and then in January of 2021, silver went back up and actually nipped out that price high to actually trade it over 30. At that point, the spread relation between gold and silver turned down, meaning silver started to underperform gold on a relative performance basis. And sure enough, during that time, the price of silver also declined. Not in a collapse mode, just in a constant staircasing, boring type mode, but a consistent trend. All the while that spread was also deteriorating, meaning silver was going down more on a percent basis than was gold. We all know that. However, last month's close in silver on that spread and the momentum of the spread is what we focus on, broke out to the upside. So ignoring to some extent the price action of silver, which right now is trading $2 off the low of last month, that spread relationship we think has turned. So it's sort of a thumbs up in the background, but an important one. It says usually when this relationship changes trend, the net trend of the two metals will go with that new direction, meaning positive for silver and gold, but silver more so. So we think that's a background positive. That at that point, we think the two could shift in a more obvious manner to the upside. And I suspect it's going to be somewhat due to the factors we just talked about. The crisis in the UK, whether or not Fed policy will continue. And we know there's a lot of people out there who are Fed-friendly economists who are screaming, oh, you've gone too far, you've gone too far. And Powell likes to think, well, we're above this. Well, tell the UK that. Well, the fundamental cause and effect is the degradation of fiat currencies, okay? Used to be they would at least be backed by gold until Nixon came along, a Republican, by the way, and, detached the dollar from gold in the international market. So, all the currencies went fiat at that point, meaning just a piece of paper, throw it up in the air, and they change in relative value to one another, but who cares? They all degrade over time. Whether you own the euro, the pound, the yen, whatever, it's losing buying value year by year, decade by decade, constantly. Why? Because the money growth in all those countries is constantly going up. Why? In order to fund government bonds, generally, and to defend certain things they want to defend, such as paper assets. Gold knows this. Why is gold behaving this way? I think because it knows that this multi-decade syndrome of fiat money has finally led to a situation in which it's going to come into doubt. And when I say come into doubt, I mean where a lot of people step forward, maybe some politicians here and there, some intellectuals, some economists, and say, you know what, this hasn't been working. It's just been a constant boom-bust cycle with degradation all along the way. And sometimes it takes a crisis, including in-the-street type crisis, to cause these major changes in outlook. I think gold knows that. Gold knows it's money. A lot of people around the world knows it's money, it's real money, and that ultimately when the fiat crisis, regardless of which paper money is beating the other right now, that's really sort of irrelevant in the long term. Ultimately, they shift to what they know will hold its value because it's always held its value. And instead of that process of decision making and of doubt taking many decades to occur and so forth, it happens so swiftly, much like the 2008 situation with the mortgage-backed securities. You know, all of a sudden the light switches hit. In this case, we're talking government bonds, pension funds, municipals, governments unable to fund themselves, state governments unable to fund themselves. And it happens so rapidly that it's a crisis type event. And I think gold knows that's pending. A lot of the gold investors don't, I think, take that into context. I don't think they're aware of that. They're looking at day to day and, you know, oh my gosh, my mining stock has performed badly, and they have, definitely. So to some extent, I think the miners even know that they're underpriced and, you know, you can only beat me up so far. I'm not going to go to zero. And I think that's being reflected now in the mining action. I think that's the place to be, is in the monetary metals. I use the word monetary because I'm not talking about platinum or palladium here. I'm talking about gold and silver. But I think that the emphasis should be on the ones that have been underperformers up to date, and that's namely silver and the miners, rather than gold. But watch the mama. I want her to break out. If I see that, I think then it's, you know, we've done it. And there's also a number on the dollar that's, you know, a rat's hair below last week's traded low. So if we see that, then I think that the things are shifting. Which is the new investors already deviated to a large extent from their fathers and grandfathers in that they've gone to crypto. You know, crypto is not backed by anything, but at least it's not unlimited in quantity, and it's not governed by government. You know, where they issue, they issue more crypto. You know, it has a limit in the quantity that can be produced. So to that extent, it has a virtue well above fiat currencies. So they've at least made that revolutionary step. And I think a lot of them have also moved over to looking at silver as well. I think there's a lot of that crowd, the crypto crowd, is also favorable to silver. I guess because it's poor man's gold. But you're quite right. I think that somewhat different void between the acceptance of gold as legitimate real money over time is diminished such that it could be a whiplash effect when the new reality sets in and people say, golly, you know, my dad was right. We have some of that. And so when the demand switch does occur, it could be dramatic, and I think it will be. So it's been incremental up to this point, but I think it could get dramatic pretty quickly in a lot of these markets, in which case I would expect, particularly if the dollar snaps that number and gold goes through its number that we've predefined, that the process is underway.